Welcome. Welcome, everyone. It's Angelo Robles. And today, Buffett bows out, Trump deals and tariffs, trade wars, AI upheaval, energy critical metals. You kind of name it. Long form today. Family offices brace for market shocks. If you thought navigating the markets were tough before, well, I think things are about to get a lot more complex. For one, Warren Buffett, the Titan himself, as we know, the last couple of weeks has stepped back, leaving a massive vacuum of market influence. We're going to ask our special guest who's going to effectively pick that up. Meanwhile, President Trump is certainly making bold moves. We're going to talk about that. Trade deals, tariffs, Middle East. Add to that the disruptive forces of AI, of energy. We have a lot to discuss. So I think you have to think as an investor, allocator, or family office, what does this mean for you? How can you navigate an ever-shifting landscape, geopolitical uncertainty, market gyrations, and effectively, like I noted, the relentless march of AI? So today, in a long-form interview, back yet again, I believe 6 times in 3 years, we have an incredible guest, Ram Ahluwalia, CEO of Lumida Wealth. Ram, it's always a pleasure. Welcome back.
It's always so much fun, Angelo. Thanks again for having me. Pleasure to be here.
And I hope the audience enjoys it. I've known Ram for many years. He's one of the most incredible critical thinkers, original thinkers, and investors that I know. And you know I like long form. There's no way that I could do just an hour with this guy. So this is going to be long. We're going to cover everything. I hope you're really going to enjoy it. And my goal is to get the best out of Ram. And there probably will be some things, maybe geopolitically, as I keep abreast of Ram's X account, of course, that I think we have some varying opinions and disagreements, but that's what makes this awesome. I am going to start, Ram, given that I am your elder after all. Man, I go back to understanding some investing from even the late 70s, and this guy was a legend back then. So Warren Buffett's retirement impact. How will Buffett's departure, I guess, saw it play out a little bit the last 2 weeks, but impact, more importantly, market sentiment and value investing, which I've always kind of questioned that moniker. What do you think?
You know, when Buffett bowed out after the Berkshire Hathaway conference, that was the top in Berkshire Hathaway stock. That's one observation. So from a market sentiment perspective, people are feeling more depressed that he's bowing out. You can see it in the prices. 2 is Buffett was the first investment influencer. And he created a cultural ritual and a pilgrimage of traveling to Omaha. And if you go on that pilgrimage, you'll see all the different brands from Dairy Queen to Coca-Cola and to other confectionaries and consumer staples and See's Candy there. And people go there and they have old friends there. And that's all moved to a digital world now, right? So, but Buffett did pioneer that. 3rd is Buffett has been the buyer of last resort. We saw in the 2008 financial crisis where he stepped in and created confidence with the banks like Goldman Sachs and Bank of America. His signaling value is tremendous. So there's no comparable voice to Buffett that can play that role or fill that shoes. There's no one that can play that role.
I'm going to throw one that you expect at you, but before I quite get to that, I can't help but chuckle. Who doesn't love a good, maybe Diet Coke, See's Candy, and a good Blizzard at Dairy Queen? Warren Buffett is not exactly the epitome of things I should do for health and wellness, but that guy at 95 and his mental clarity, man, it might be genetics. I don't know what it is. I don't think it's the Diet Coke, See's Candy, and Blizzards.
Well, he said for aging and longevity, look, he's clearly not following the Brian Johnson protocol. But, the 2 things. One is he got up and he went to work every day and he never stopped doing what he enjoys doing. 2, he's a part of the community. Community is a big driver of longevity, having friends, feeling valued, creating meaning in the lives of others. So he was doing that day in and day out. He retired because he said that for the first time, he noticed that Greg Abel, his successor, could just run faster than him. and Buffett couldn't run as fast as he used to. So I think there's a lesson in all of that. Retirement, when you hang up, your kind of work efforts, that is the beginning of decline. You have to remain active, right? Nature rewards activity and
It's
contribution.
extremely, Rom, pardon me, but it's extremely difficult to ever replace a Warren Buffett. So sure, short term there's going to be gyrations in the stock, like you mentioned. Greg, I'm sure, is highly capable. Otherwise, Buffett wouldn't be doing this. But that being said, markets are not always logical. There's no question there must be some vulnerabilities, I would think, relative in Berkshire Hathaway. Uh, what would you do if you were an allocator? Do you sit and wait? Do you be tactical now? And what's your perspective?
As it relates to Berkshire Hathaway or markets in general?
We'll start with Berkshire.
Berkshire is overvalued. It's more expensive than the S&P 500. That's number one. Okay, so if Buffett is the paragon of value investing, Berkshire isn't getting you that. You're paying for comfort when you own Berkshire Hathaway. And now it's lagging, as I mentioned, ever since he bowed out. Greg Abel, his successor, is a highly regarded operator and very good at capital allocation. That's really what Buffett was doing, is capital allocation. Is where do you allocate the free cash flow to the 80 controlled, privately held businesses, and then capital allocation in the public markets with acquisitions or investments. But I haven't been terribly impressed with Berkshire Hathaway's holdings. When I look at their holdings every quarter, I do a 13F analysis, my team and I, and like Sirius XM satellite radio, I don't get it. That's in decline.
None of us do. But Warren is Warren. Maybe he saw something we didn't. Although if you judge it by the returns of that underlying holding, probably not real.
You usually see what he's doing, though. Like American Express, that makes sense. The big banks like Wells Fargo, when he owned it, that made sense. Selling Delta at the lows, that didn't make sense. Oxy, I look at Oxy every month. I'm saying, what am I missing here around Oxy Petroleum? He used to defend the bid at $60. He stopped doing that. Now it's at $42 and it's in a bear market. I don't get it. And even by Buffett's own standards, it's very hard to understand the thought process behind some of these. It's possible that Buffett maybe had checked out sometime before. And also, something you and I have talked about before is size the enemy of returns. If you're an elephant hunter, you've got to find elephant-sized deals to move the market, to move your own performance. And in his last conference, he also said that someone asked him, what would you do if you're starting over again? He said, I'd find small cap stocks. And that I agree with. Finding good opportunities that are smaller, less trafficked, under-owned, that are compounding. Smaller insurance companies, they're out there. They're doing well. So, yeah, I think, I think we'll miss his voice and his humor and his wisdom and his grace. A lot of people hate on Buffett. I don't think it's really well-deserved. I'm in the Buffett camp of, he's like an American legend. He's like apple pie. I'll miss his voice. I mean, he came out against not taxing carried interest. I think, maybe you should do that. So, he's opined on American policy. He's usually been ejected when that happens, right? He flirted with politics in the early 80s. He had a recipe to fix the California budget deficit, and they said, "Hey, no thanks, Buffett. Why don't you go back to Omaha? We'll take care of this." So, look, I think he'll be missed. I'll certainly miss him.
Of course. I mean, how could you not agree with that? Yes, some of the recent statements from my perspective politically, I probably wasn't the biggest fan of, but there's no question if there's a Mount Rushmore of investors, how can he not be on it? And you and I we got to put Stan on there too, of course, Ram. We'll get to a little bit of that shortly. Staying a little bit on that theme, Berkshire Hathaway's amount of cash is, for the all-time records. Buffett is right. I'd like to hope more than he's wrong. And he is stepping back. Is he seeing something broadly? Is he connected to something globally that we don't see that's a little scary moving forward?
There are two things he's looking at. And the first is actually a marker of his legacy. One is we live in the age of quality growth at a reasonable price. That is Buffett. That's actually Munger. Munger influenced Buffett to shift to that style of investing businesses like American Express or Coca-Cola, to pay up for a dominant market leader with a brand for a higher price to own a great business. All those businesses are expensive. I have a list called Berkshire Hathaway type businesses. They're not necessarily owned by him, but the kind of thing that Berkshire is supposed to own, like a JP Morgan, like a we talked about American Express, like a Philip Morris or a Costco or a JP Morgan, a FICO. So these are world-class businesses, and they're all expensive. They all are extremely expensive, right? Costco is the poster child for this. I poke fun of Costco every now and then. The forward PE is now 55, up from 50. Trailing PE is 60. So you've got to wait 60 years, assuming earnings is flat, to get your principal back on that business. That doesn't make much sense. That's one thing. The other thing he's looking at is the ratio of market cap to GDP. That's a famous Buffett statistic. It's also known as Tobin's Q. Tobin was like an economist, came up with this, the ratio of financial assets to real GDP. So yeah, I think those are the metrics he's looking at. He's usually a year early when he rotates into cash. So in April, he looked highly prescient during the correction. Now markets are recovering. So it's, maybe Buffett's missing this. But I'd say those are the two things that he's looking at.
I'm going to pick on one of them a little bit with you. I hinted at it effectively in my open question. I don't, yes, I know technically what value investing is comparative to growth. I think it could be a little bit of maybe the word I would use is a false moniker. Any stock I invest in, I want it to grow in the future. I want it to be great. If I could get it, I guess you could say at a discount. Arguably, that means there's something wrong or people are looking at it wrong. It's undervalued, sure. But we all know periods where value investors have gotten whipped for actually a good part of this century.
Buffett introduced the concept of quality compounding. Value is an element of it, but a key part of it is the compounding. He focused on book value per share and growing book value per share, where most people focus on the income statement. He focused on the balance sheet. And this is why he loves insurance companies and banks, because those businesses are actually balance sheets. He wants a balance sheet that can grow. It doesn't need to have, a bank is nothing but a set of assets and liabilities. You borrow short, you lend long, you generate net income. That compounds your book value per share, and you can lend out again and grow and compound. And insurance, very similar concept. So the value story is highly misunderstood. It's very misunderstood. There are a lot of terrible businesses that are in secular decline, in part due to the rise of technology, right? Amazon, Walmart, and Costco are taking out small businesses. I went to Walmart this weekend, and it's the eighth wonder of the world. It's so much to marvel. When I grew up, we had a separate bike store. We had Toys R Us. Walmart has both of those. Walmart also has the local barber salon. Walmart has the tire company, Mifflin and Co. They've got a garden shop. So it's the idea of investing in quality businesses is expensive, is priced in the market. That was really, I would say, the contribution of him and Munger. But it's more than value, right? If you invest in a value trap, it's not going to work well. But value with other characteristics like earnings growth does work. Dave is a good example of that.
Yeah, Dave.
100% plus, eaten multiples of that actually. It had an 8 times forward PE in January of last year. Monday of last week, I had like an homage to Buffett where I shared 5 Buffett-like picks that are small cap insurance companies. They look fine. If you look at like Renaissance Re Holdings, ticker R&R, the business is compounding book value in the mid 20% each year. The book value per share is compounding over 10 years. It's done very well. And the other ones like Kingstone, ticker KINS, Kingstone companies.
Yep.
This one has a forward P of 8 times earnings, trailing 10. Guess what the 1-year return is, Angela? I'll give you ABC. 10%, 50%, 200%.
50%.
It's 236%. Okay. So that's a value stock. It's a value stock now. So yeah, if you're investing in a business in secular decline, then you're gonna have issues. Kodak, Polaroid, horse and buggies, and there are plenty of those around. There's certainly plenty of those around, but retailers facing the onslaught of Amazon, Costco, and Walmart would be one example of that. Obviously, cable televisions and newspapers, but no, I don't think value is not dead. In fact, when valuations get elevated, the S&P is now at 21 times forward earnings. That's expensive. Now, I would expect that earnings estimates go up, by the way, because analysts really cut back on analyst earnings estimates in the last 4 weeks. So estimates can go up and earnings growth can go up. But usually when you get to an elevated S&P multiple, then you see a rotation into value type ideas, right? In the dot-com crash, the best strategy to own was small cap value.
Of course, you mentioned earlier, I was going to bring it up later, but I do like to mix things up and not always go by what I deem to be a sequential order. You mentioned the verbiage capital allocation, a little bit of one of my calling cards in my work with single family offices. It's your people and your capital allocation that are probably among your biggest determinants of success. Family offices generally do a pretty good job of not optimizing either, but maybe not quite the subject of today. Although with Ram and I going on, who knows, a couple of hours, always possible. But I would like to go back. You could also comment on people allocation. That absolutely applies in a corporation or company that I'm investing in. The quality of its people are going to be arguably its most determinant value to success. And I think of someone like Elon Musk and their capital allocation. So those are a very powerful 1-2 punch. I'm not going to say you can't go wrong if you get those two really right, but okay, I'm going to say it. You practically can't go wrong if you get both of those right. Why does it seem to be so elusive for too many?
Yeah, it's a great point. The number one driver of returns is capital allocation, hands down. There's a fantastic book called The Outsiders. You can get it on Amazon. Not The Outsiders fiction novel, which is a great coming of age book too, but this is an investing book. Here it is. It's written by William Thorndike. And when he was at the University of Pennsylvania at Wharton, he had a bunch of graduate PhD students analyze decades of security price return data and identify what were the attributes of the best performing investments of all time. And there are different lessons in the book, but the one primary lesson was the skillfulness of capital allocation at the management level. A good example is John Malone when he did the cable station roll-ups, which ultimately led to ABC. So they had discipline. They would acquire cable stations at a price to free cash flow ratio of under 6 times, right? Not acquire at any cost. Acquire at a value that's accretive, that earns a return on invested capital above your cost of capital. That's a classic way of Buffett thinking, actually. That would accrue book value per share. Book value per share. So one way to think about intrinsic value, eventually market prices catch on and price. So yeah, capital allocation is the thing. It's the thing. It's the main thing. Human capital matters too, right? Absolutely. It's in talent. But Buffett also would say he'd love to own a business that any idiot can run, right? So that matters too. Human capital matters. You still need great operators though. I mean, there's a difference between a Jamie Dimon and a CEO at most other banks. I mean, he's built differently. There's a difference between, take think about these Max 7 founder CEOs like a Mark Zuckerberg or an Elon Musk in terms of their tenacity and energy level and the ability to mobilize people and offer a vision and build a product and make decisions quickly and attract a great team and execute. So absolutely, human capital matters. It's a different underwrite though than, like Buffett bought See's Candy, it wasn't about the management, although, you have to have skill if you're going to build any great business, but it was about the quality of the business. It's got a brand, it's a consumer staple, you can pass on inflation, you can understand the business easily, you can measure same-store sales, you can figure out the cost to launch a new store, what the payback period is on the new store, how quickly you can plow back earnings. That's the classic Buffett approach. Same thing with the bank. What's the cost of funding? What's the return on your loan? What's the market you're lending to? Do you have high quality customers? Do you have stable deposits, etc.?
Very good points there. And by the way, for especially my audience, but any audience, if you hear this, the interview I did with Ram, of course, multiple hours, I think it was about a year ago, we broke down not just Buffett, but the concept of a holding company, and we went pretty darn deep. I highly recommend that. I think it was kind of underrated as one of my longer form interviews from last year. It is somewhat evergreen. I would say you could probably hear that in 10 years. I think a lot of the principles, 98%, are still going to apply. So my members just reach out to me or go to my @family office on YouTube and you'll find it, or put me and Ram into one of the search bars. He'll pull up several. Question that I have. So we brought up one legend in Buffett. So I was around the Milken conference and it was in LA about a week and a half ago. I was hosting some programs for my single family offices and of course having a great time. And up on the rooftop of the Waldorf, which is kind of the place to be, and great cocktails and drinks, a lot of the overflow of the Milken, was one of the managers, hedge fund managers, if you want to use that word, that I don't know if he's throwing himself in the ring as the next Buffett, but certainly people are. And there he was, couldn't miss him. He was holding court, was Bill Ackman. Your perspective of Ackman, and again, comparing anyone to Buffett is probably hearsay and not applicable and unfair to really everyone. But nonetheless, I can't help but ask, he's had some great years. He's had some real shitty years. What do you think?
Yeah. So there can't be a next Buffett because Buffett strategies are expensive in large cap securities. That's it. Buffett priced himself out of the market is another way of saying that. Right? Right? Like you can't replicate Buffett now. If you did, you're going to lag. If you want to buy Buffett stocks, you're supposed to buy, theoretically, leaving the valuation aside, things like Costco and FICO and all this stuff, Walmart. The market's picked that over and repriced it higher. So then you say, okay, then I won't do that. Then what are you buying? Because quality is price expensive. You can do it in small caps, though. You can do it in small caps. Ackman's not doing that. So I think some small cap managers, potentially, but who are those? Ackman had some good deals right out of the 2008 crisis, like when he had the debtor in possession financing for like the shopping mall trade and did like 10x on that. That was clever. When he bought Chipotle Mexican Grill, when they had the E. coli outbreak, and the stock was trading very cheap. That was a dislocated high quality asset play. That was clever. Easy for people at home to do, by the way, those kinds of things. Like when Google dropped 10% 2 weeks ago, we made it our largest position. That was like no brainer. High quality dislocated asset. People can do those strategies, right? But Ackman, he's still trying to sell down his position in Chipotle Mexican Grill at 40 PE. It's been a bear market for a year now. It's down 20%. He is trying to build a holdco, and he's charging egregious fees to go run it. He can't get it off the ground because people are too smart to give him permanent capital. Ackman also figured out that one of the best businesses in the world is to have permanent capital. Permanent capital means the assets never leave. And if you charge a management fee on that, then you're in a great business. I think that's Ackman's fundamental angle. Buffett never had that, by the way. Buffett has permanent capital through Berkshire Hathaway and all these entities that generate loads and loads of free cash flow. Every quarter, he has a new bazooka generated, essentially, in terms of the free cash flow generation, right? If he's targeting an ROE of 20%, and he's got leverage that's cheap, he's generating so much free cash flow that he can pull the trigger on new opportunities when they come up. But Buffett always criticized the model that Ackman wants to create, right? And Buffett would draw a distance between him and Ackman in terms of the approach that they would take. right? I mean, Ackman essentially create this captive capital vehicle and then have permanent fees on this. So, yeah, no, Bill Ackman is not. He's not the next Buffett, not at all. Buffett has 80 privately held businesses too. It's in Berkshire Hathaway. What's Ackman doing around that? Like Brad Jacobs has a better shot of being. I'm not saying he is either, but Brad, at least, he's been able to identify quality compounders, build them as an operator. He absolutely understands capital allocation.
For sure.
Right? United Rentals, Waste Management. Now he's doing QX. So you and I talked about that some time ago, a year ago. Like he's far more credible, although he's not in the business of doing what Buffett's doing, obviously, in acquiring public securities markets wise, but he's definitely far more credible than Ackman would be.
And Ram, how could we not talk about, I briefly mentioned his first name a little while ago, and that would be the hedge fund manager, a person we're both certainly, let's go with broadly the word, I don't want to be fanboys, but a fan of, and has one of the wickedly most incredible return profiles of all time. What makes Stan Druckenmiller so incredible?
Druckenmiller, I would argue, is a better investor than Buffett, actually, although part of it has to do with how much capital you're working with. Druckenmiller is like, I don't know, sub $8 billion. So given the same amount of capital, what would have happened? And also you need to have Buffett in his prime too. Because as I mentioned earlier, I just don't see much sense in a lot of what they're doing now. I understood why he sold Apple. That made sense to me. I understand why he's selling Bank of America. That makes sense to me too. I understand why he's getting rid of stuff. So Stanley Druckenmiller is extraordinary. I mean, I go through his 13Fs every quarter. There's a couple of things there. One is, he has more of a trend following component than Berkshire does, a momentum component than Berkshire does. He's not there to provide rescue capital when everyone's fleeing. He likes to find a 2 to 4 year secular trend, then own that. The data center was NVIDIA, and he expressed that in a couple different ways. It was like Seagate, some others. He's got a pharma trend in there. He had a healthcare trend in there. So he likes to bet on trends, multi-year bets. He's very good with security analysis. Like the business he owns they're pretty good. But the thing about Druckenmiller, though, I think people don't appreciate this, is that Druck also gets a boost because he's Druck. When people go through his 13F filings, they buy his stocks the next day. I've seen it.
Yes.
Every quarter. Here's an example. Don't buy the stock. Pure Cycle Technology, ticker PCT. The day after the 13Fs come out, the stock goes up like 8%. By the way, it's down 16%. It's in the last 3 months. He creates momentum in the small and mid-cap securities because he's Druckenmiller. People are imitating and following him. He can do that. People catch his draft, and he can create his own self-fulfilling prophecies. I still go through the names anyway, though. Like Philip Morris is a good idea. The other thing about Druck that most people don't get is people associate with him being this like big macro guy. He's the first to say that his macro comes from studying the earnings of the companies, going through earnings transcripts, talking to management, listening to what they're saying. He does look at the big macro stuff, like when the Fed raised or cut rates 50 bips in September of last year, he shorted bonds immediately. So that's there, right? When he was looking at Trump versus Kamala, he said Trump would be inflationary, Kamala would be deflationary, et cetera, right? So he's looking at policy also, but he's a more dynamic investor than Buffett. I think you can get the next Druck. You can't get the next Buffett. Buffett's priced. Like that strategy is priced in the market. It's expensive. Momentum investing, that is still alive and well. I think that Druckenmiller has a lot of exposure to momentum. Not all of it, what he does, but he has a lot of it.
I think one of the better investment quotes of all time, I'm going to quote George Soros. And my verbiage, I may be a little off. And by the way, I could, those of you that know my views, I probably couldn't be any more different politically, geopolitically than Mr. Soros. But you have to tip your hat to one of the greatest investors ever. And speaking that Stan was a disciple of his. Soros said something to the effect of, and as someone who dabbles in poker and blackjack, it's not how many times you're right versus how many times you're wrong. It's the percentage of money you win and lose. So that is 100% accurate. I could play poker and lose 80% of the time, but what am I losing versus to what am I winning when I win? Am I winning really, really big? Do we tend to get a little too caught up in the percentage of being right and less so into taking big, high conviction bets?
100%. Wow, this is a very powerful concept, and it's so underappreciated. And Ken Griffin last week, I listened to an interview he had where he said that his best fundamental stock pickers, the folks that know the business and the industries the best, are right on average 54% of the time. Now, I don't know what time frame he means, but that's the number he quoted, 54%. So the key is the average win to average loss ratio. That's the key. And there's another, there's a great podcast by a manager I liked, whose name is David Orr. It's on the Risk of Ruin podcast, Poker Player. Poker has a lot to do with investing, actually.
Of course.
And let's say you make 10 bets and your hit rate is 60%, which is high. And then of those, of those four losers, if you close them out and rotate and you achieve the same hit rate of 60%, you're going to improve your portfolio. If you don't, then you're going to not move your portfolio's performance higher. So that's the key thing. Now, the hard part about it is distinguishing right and early, right? That's a key part of it. And distinguishing a market move from an invalidation of a thesis. A good example is the April correction. We went through the transcripts of this whole data center thing. I have a newsletter called the Lumida Ledger newsletter. Every week, we also just dive into a couple of companies, whether we own them or not, just understanding themes like what's happening in retail, what's happening with the consumer, what are banks saying about consumer spending and loan demand, all the rest. So what we found is that the backlogs were all increasing, the visibility was still strong, but they were all getting tossed out, right? So you have a mismatch here. That's where it becomes very interesting when the price is going one way, but the fundamental read is going another way, and distinguishing what to do in those situations. I agree. It's win to loss ratio. Mm-hmm. Percentage hit rate matters more versus average win and average loss. And what Soros and Druck would also do is bet larger, especially Soros, right? Druck actually has like 80 positions, by the way. It's 80 positions. Yeah, he's got a lot of positions. It's a misunderstanding people have around Druck. He's not actually taking big swings. He has good thematic diversification and good idea generation. I think that's actually the right approach. That's what Point72 does. That's what Citadel does. The hard part is that it's very difficult for any individual investor to do. It's even difficult for an RIA to do if you've got two analysts. Like, you need AI, you need technology, you need capability. But if you can diversify across ideas and themes you like, where you have an edge, that should move you up in terms of risk-adjusted return.
Sure. If I could go a little back and forth with you, Ram, and we might have discussed this back in November. I mean, how many great ideas could someone have? So you got 50 best ideas that you're going to put what, and I'm making it simple, 2% of your capital into equal 100%. You probably have one great, maybe thematic idea. You pick one or two, three, quote unquote, stocks, if you could call it that, around it. And then you have some satellite. What I'm trying to get to is diversification. I mean, maybe Munger was right. I have an intimate basket of holdings and I watch that very, very closely. as opposed to I have 100, 200, or 300. I'm going to be a beta hugger.
Yeah, if you have quality compounders, then you can just watch them closely and let them compound. So it has to do with, your time horizon and a lot of other considerations. If you have quality compounders, you can close your eyes and wake up 10 years later and it's supposed to be worth more. If you have an insurance company or a bank that's just growing their balance sheet, they have good cost of capital, they secure funding, they've got a nice niche they can occupy, then you're right. You can take that approach. You're not going to get incredible returns most years, but over the long haul, you can do really well. That's a long-term investor approach. Quality compounding, that can work, right? Now, how many great ideas are there? It's something I think about now and then, actually. There are a lot of bad things out there for sure, because we have a bifurcated economy and it's accelerated with technology. We'll come back to AI disruption, I know, later.
Oh, trust me, we will, audience.
The power law of competition and winners keep winning. That is a real force in capitalism. As I mentioned with the Walmart analogy, Toys R Us is gone. Local newspapers are gone, right? Google's filled in all of that. Tower Records gone. Virgin Mega Music Store gone. So there are more losers than there are winners. That said, how many winning ideas are there? There are many. I'll give you a few themes. UK banks, they're cheap. They have mid to high single-digit PE ratios with earnings growth, free cash flow, buybacks. They're protected from competition. They're licensed businesses. That's one theme. The second is Mexico and Brazil. They're both on a tear year to date. They're beating the S&P. Mexico's a beneficiary of nearshoring versus China. So that production is moving from China, to Mexico. Brazil is probably one of the best ways to express international small cap. It's cheap. The country is experiencing disinflation. Finally, the earnings growth is strong. They have a growing demographic story. Commodities are rallying. That helps benefit Brazil as an oil producer too. You can get a stock like Petrobras, which has a double-digit yield right now, or payments companies like PagSeguro or Stone. So there's that's another theme. We've given you 3 themes thus far. 4th theme, data center theme. I think Meta's pricing now. We talked about that before. Google is extremely cheap. Taiwan Semiconductor, fantastic way to bet on the AI theme. That's at like 15.8 forward PE. Not terribly expensive, 20% year-over-year growth. That's a good theme. 5th theme, uranium. I had interviewed the CEO of ASPI in May of last year when the stock was $2.60. Now it's like $7 something. They reported yesterday, right? Uranium, these themes come and go though. Like they get priced in quickly, right? So you have to be flexible. Aging and longevity is a big theme too, right? Baby boomers are getting older, so that creates demand for healthcare, medical devices, technology. I mean, even just private aging and longevity, right? It's hard to express that in public markets, but like all these small companies that are growing quickly, providing services, whether it's like NAD infusion therapy, that's probably not the best business model in the world. I know I avail myself of that from time to time. So that's what we're at 6 themes now, right? It can keep going. There are good themes out there. Insurance is a good theme. Property and casualty. Businesses have higher rates that they can charge to customers because state regulators are letting them do that. It's mandatory spending. You got to pay for your auto. You got to pay for your property and casualty insurance by law. That theme is still attractively priced. That's a good thing. I'd want to own that theme. What else? American banks are a good theme still. I mean, they're kind of expensive. You got to pick and choose them. JP Morgan, pricey from a price to tangible book. It was great 2 years ago. Mm-hmm. But there's still banks out there. Maybe Citizens, for example, right? So anyway, there are a lot of themes. There are a lot of themes and a lot of businesses within those themes.
A lot to follow up there. An audience, long form. We're still going to cover Max 7. I'm going to throw in gold. We're going to cover Bitcoin. And of course, well, those that know me, we are for sure going to cover AI, and that will play somewhat into the Max 7. But let's take a little divergent. With Ram as a critical thinker, I like to go around the world because so many different things are happening. So I hope you enjoy this as well. Let's turn our attention to a little bit since we last caught up. Maybe that was right around the time with the election in November. So Trump won, but now he's, well over, I guess, 100 days in office. And probably the thing that I'm most going to turn my attention to you with was April 2nd, Liberation Day, the tariffs, and henceforth, massive trade imbalances that the U.S. has had, in my perspective, like with Trump, very negatively to the U.S. for decades. Therefore, doing the same old thing and keep on adding to our $37 trillion of debt, I don't see how that is a good thing at all. Now, I know I'm dragging you into political and geopolitics, Ram. You may want to play it a little careful. I'll leave it up to you. But I looked at it as the man lives in chaos. It does look chaotic. Markets like certainty. I'm a little afraid too. We are as far away from out of the woods as you can get, but things have settled down somewhat. Some of the UK relationship, China and others, it looks like we're trending in a positive direction. I might be wrong. Your perspective could be different than mine, and that's great. I can learn. Nonetheless, sometimes you have to shake things up to kind of reestablish your dominance or the world order. Where am I right? Where am I wrong? Or more importantly, what's your perspective?
You want to focus on tariffs or just policy more generally, or Trump? You want to go?
Oh my God, you're giving me a lot of options there. I actually kind of want to cover all three.
Okay, let's start high level. So Trump won on a Main Street message of the inflation is too hot. Look at eggs, look at milk, look at groceries. That was one part of it. The second was a deregulation message. And the third was tapping into this backlash against centralized authority that might include healthcare in response to COVID and lockdowns, for example, right? He
As
also
a hardcore libertarian, every three that you just mentioned would be incredibly important and valuable for me.
Sure. And the other is DEI. He tapped into that. He said, hey, what's going on with DEI here? This has run too far. And wokeism and gender topics and questions. He tapped into Main Street wondering what students are doing on college campuses, talking down to the United States and sympathizing with like Hamas.
Yeah, like a disgrace. I mean, broadly, I wonder what the hell many students are doing in college anyway, but I don't want to turn into Charlie Kirk. That's a different discussion for maybe a different.
This is the Trump story, because not everyone gets it. This is the Trump story. So we've got like 6 bullet points on the Trump side of the ledger. Then we'll come back and talk about the other side of the ledger. Okay. So the, the other part is tapping into these grievances of the Rust Belt and low-income Americans that, in his telling of the story, has not participated from globalization and the tremendous wealth creation in financial markets. I think they have participated, unfortunately. I'll get back to that later, but it's complicated. Progress isn't fast enough, right? And social media doesn't make it easy too. When you see people flying in private jets and having, all these campaigns on Instagram and sons of daughters of these billionaires, and doesn't really help. And watching the Kardashians and all that stuff. So that's what he tapped into. I think the other thing he tapped into is a skepticism of government, right? He talked about the JFK files, the Epstein files on the Joe Rogan show. He tapped into, again, Main Street. Like he was at McDonald's offering fries. He went on these podcasts where people consume content that are replacing legacy media. What else? The funny thing is that, and also you talked about, hey, I'll release the files on UAPs. We haven't seen that. So,
and obviously Epstein and Kennedy has been somewhat disappointing. What we've learned so far.
It's so disappointing. So 2 days ago, just briefly on that, there's a question of Epstein and did he commit suicide or not? And So his FBI director and the
Patel and Beningo, yeah.
correct, they both went out and said, look, no, it's a suicide, guys. It's a suicide. It's like all the conspiracy theorists are like, huh? No, but you're our people. You're supposed to, where's the deep state? Tell us the truth, what actually happened. They're like, no, it's a suicide. What about the JFK session? Oh, you know what? Well, we gave you all the files. Go figure it out. I'd ask Grok to figure out who killed JFK. I'm still not sure. Right? No one knows. So it's like plus ça change, right? It's like but anyway, that's what he tapped into. That's what he tapped into. I think the tariffs he executed. I think overall, I'm just trying to be independent and objective here. I believe that on Inauguration Day or a month after Inauguration Day, if he had a re-election, he would win by even higher margins because he tapped into all of those things. Like disinflation happened because of capitalism, not Trump. Okay. But the tariff story didn't land, and that cost him a lot.
Mm-hmm.
He's obviously pivoted from that. It looks like Buffett won the internal struggle in the battle. And Trump's instincts are for tariffs, but markets have put him in check. He'd rather have a rising stock market, it looks like, and not lose in the midterms. If he didn't pivot on tariffs, they would be shellacked in the midterms. Like small businesses were feeling an extreme amount of pain. Small businesses are his voter base. Like small business owners are a part of his voter base. So, but we'll get into tariffs too.
Dig into that.
And yeah, exactly. I think his approach and the style around the tariffs, and this is a big misunderstanding. He doesn't understand it. He views the trade deficit as a P&L. He said it many times. It's a wrong way to think about it. Besant knows better. But Besant was great. He was able to say, hey, look, focus on deals, Trump. Focus the trade war in terms of deals and resolution. And deals mean, wins and how Trump thinks about the world. And that was a clever way to off-ramp.
Don't you think there's been some deals that have been net positive to the U.S. in the last couple of weeks?
Like the UK deal, you know what happened in the UK deal?
Tell me more.
So what happened? So UK agreed to lower their tariffs, and the United States increased the tariffs to 10%. Okay. So if you look at this one pager summary of the trade deal, like here's the revenue from this deal, and then open up some elements of those markets. Okay. So what it really means is the United States increased sales taxes on its citizens, and the UK lowered taxes on their citizens. I'd rather be on their side of it. I'd rather get lower taxes for consumers and small business owners. I'd rather be on that side of it. I'm all for opening markets, though. That part's a win, but it's a negligible win. Part of this confusion is that the way the admin talks about trade deals, they make it sound like a bilateral transaction between like Xi Jinping and China as a country and the United States as a country. That's not what's happening. These are voluntary decisions by tens of millions of small businesses that are sourcing at the lowest possible cost, at the highest quality possible, and making long-term decisions on where they hire and where they invest in a competitive marketplace. So when they say, hey, we're getting ripped off, who exactly is getting ripped off there? Who? What he's saying is, Nike, you're getting ripped off, you don't know it. That's what they're saying. That doesn't make any sense. Nike knows. Apple, Tim Cook, the CEO of Apple, came up through the ranks as the leader for their supply chain. He's saying, hey, blanket across the board, all of you are getting ripped off and you don't know you're getting ripped off. And we, the government, know better than you, which is not libertarian, by the way, to your earlier point, right? There's 8 libertarian, freedom of markets, free enterprise, competition stories here, except we, the government, know better than how you, the consumer, how you, the small business, should make a decision. And let's play 52 card pickup with that, and then change the rules and have extensions and tariffs and suspensions. And, so that I think they pivoted from that. That's fantastic. I think they'll probably land at the 10% tariff rate, but there's a lot of drama, a lot of theatrics, A lot of
If we didn't do
unnecessary.
anything, like how could our situation with China and the trade imbalance be good? That we're not manufacturing enough? What happens if we get from a Cold War to a kinetic war with a
Yeah,
place
there's
like China?
legitimate concerns around China as a peer competitor that is hacking American IP and defense institutions and banks. Who knows? Maybe Equifax, and without many consequences at all. It's a significant concern. And then obviously their aspirations around Taiwan, uh, and their influence over Russia. Right? I mean, there are legitimate concerns around China, not to mention like human rights abuses, et cetera, right? Just from a national security perspective, China's ahead on battery. They have the largest experimental fusion reactor. I don't think people saw that news article. The largest experimental fusion reactor they picked up on satellite. They have
Yes,
more
that's
efficient,
the one.
yeah, more efficient battery technology in the United States at BYD, better EVs at lower cost, more efficient solar at lower cost, at scale. And no, it's not dumping. It's legitimate competitive advantage. Uh, so yeah, they're a legitimate competitor to the United States, but they have a lot of disadvantages. Most significant, of course, is that they had this one-child policy, which is another act of the government saying, "Hey, we know better than you, the family and the individual." Look at where that got them. They're head in robotics too. You know, I saw a Chinese version of a Boston Dynamics robot in Dubai. It rolls over, it plays tricks, can follow you, it stands at attention. I think Boston Dynamics is like 3 years behind. Google sold Boston Dynamics. You know that they acquired Boston Dynamics, and we don't know what the backstory was. I imagine it was like, what the hell did we buy? These guys aren't leading. Let's just sell this to someone else. They make great YouTube videos though.
I mean, you bring up a whole bunch of issues, things that I've spoken about with the former head of the cryptologist, head cryptologist at the U.S. Navy, and other guests that I have on. I think Americans are sometimes ignorant to that. There's many areas in the way of exponential technologies, data gathering, robotics, energy, and the fact that they don't have guardrails, they don't have organizations that are holding them back on energy production and to some degree manufacturing, and a variety of different factors that give them massive advantages in a new world economy. Let's not even bring up that the World Bank and other organizations consider them a emerging market and they get advantages with that. There's so many ways they've been able to pull levers, God knows what, to influence people. And we just sit by for decade after decade and do nothing about it. I finally see something now. Although it comes with rhetoric, it comes with massive ego, it comes with talk about a third term, which is disgusting to me. But nonetheless, I see more intelligent people broadly within his cabinet and decisions being made that maybe at first looked a little chaotic, but that are somewhat coming together. And even someone like David Sachs in terms of crypto and AI, don't you think there's been some good things that are going to make us more competitive on the global stage and against China?
Yeah, like China needs tariffs, actually. I'm all for tariffs on China. I'm all for a free trade wall around China where you get American allies to slow the ascendancy of China. But that's not the approach that Min took. It was Besant's idea. He actually wanted to take that approach, but they rolled it out too little, too late. And other allies said, hey, we're inviting China here for a trade conference. And Europe needs China too. Europe needs disinflation. Europe needs humanoids. They don't like Elon Musk, number one provider of humanoids, presumably in the next 2 years. They don't like Elon commenting on elections and so forth. So it was just mishandled. It's really unfortunate. It was kind of a blunder. There's a real opportunity there. The competitiveness of the United States versus the rest of the world comes from American private enterprise, innovation, research, human capital, education. That's where it comes from. It's not the U.S. government. It's not the U.S. government. Who builds F-35? It's Lockheed Martin. Who runs the computer systems for the IRS? Booz Allen Hamilton. And yes, we pay way too much for that. It's absurd.
You left the door wide open on that one.
Like the strength of the United States, it's always been about decentralization and private enterprise. And the magic of capitalism is that the few can impact the many in a very beneficial way, right? We have 1% of Americans are farmers, and they provide food for everyone, and they export to the world, and they specialize. They know what they're doing. That you can tell the same story for software, right? Like technology can be adopted by people that need not understand how the technology works. Just like Milton Friedman video, like how a pencil comes together, right? And free to choose, let's say. So yeah, so I'm all for the deregulatory agenda Trump has. Where is that? Where is it? I was in upstate New York this weekend. I had dinner with the general manager of a factory that builds Kevlar vests for the American military and a doctor. And he said that the local municipalities are regulating them now. Like, how do you fix that, by the way? Shoot. I mean, how do you fix that problem? Yeah, everyone wants to regulate. And it is a significant issue. Like, the LA fires, you have certain controls around what kind of rooftops you have. That's just one small example. The bank and the regulatory capital rules, it's another example. There are many, many, many examples. It's like barnacles on the ship. You got to just cleave off a lot of that. And now, of course, with the Chevron doctrine, you're going to have a significant amount of deregulation happen very quickly, by the way. And by the way, it might be too much too quickly. Kind of funny. I'm all for like free markets, and you have tort systems. You have the ability to hold people account through court. That's what the tort law is all about. Congress, they can't create regulations. Part of the Chevron doctrine, this is under discussed, by the way. What's happening is, due to recent Supreme Court rulings, the teeth and the rule-setting capabilities of the major regulators can be substantially diminished. You can contest them in court. You can say it's not on the law. There are a lot of regulations we've lived with that you can now go back, or soon go back and contest. Things we take for granted. For example, what is considered a money market fund, right? What is a crowdfunded securities offering? There's a lot. That's just in the world I live in, Congress can't get their act together. I mean, this is why they delegate their duties and powers to agencies. And, these agencies have also grown in size and complexity, and they're dragging their feet.
That's
right?
an understatement.
That's a legitimate critique too. It's a legitimate critique also.
Of course it is. We're, I was going to use a swear word. I'll clean it up a little bit. We're a mess. We have massive bureaucracy. The hope of Doge was promiseful, I would like to believe. And it's, we could go a little back and forth on that. We have massive bureaucracy in this country, regulation after regulation after regulation. Sure, I look at it through a libertarian lens. I get it. Some regulations are needed, but just the fact that I want to be a hairdresser, I got to spend $4,000 to get a certain certificate. It's just ridiculous. And I don't think it's ever going to change. I'm being a little negative. And you mentioned, maybe indirectly, the reasons why. Midterms, then the next election cycle. There's not enough time to do what needs to be done, which probably is to some degree limiting or cutting even entitlement programs.
Yeah.
How are we going to, and maybe they'll segue a little bit into, if you're a believer in Dalio's debt cycle, we have $37 trillion of debt. How is this being addressed? We have massive interest on our payments. We have so many challenges that even shaving off $1 trillion or $2 here and there, sure, it's a good start and better than nothing. How is this going to address the long-term problem? I have some guest on that will say, as long as we're the dollar reserve currency, all is kind of okay. That doesn't make me feel good longer term.
It's a lack of political responsibility and a lack of political leadership fundamentally. And it has to go to a desire for preservation of power. That's the simplest explanation. You have people in Congress staring at 8% deficits that they're proposing, like Republican-led Congress. They're supposed to be cutting. They're not. By the way, this is great for markets and the economy. As an investor, I'm like, all right, great. I know how to bet against that. Thank you. But as a public citizen looking out longer term, what the hell are these guys doing? Doesn't matter who's in power, right? Bessent's answer this Sunday on one of the political shows was, we're going to pay back the debt by growing GDP at a faster rate. Guess what? That hasn't happened. If you can do quick study in Grok, look at GDP growth versus debt growth. We had dramatic GDP growth in 2021, which was the year after we had dramatic debt growth from stimulus spending and QE. Right?
Mhm.
It turns out fiscal dominance works, but it's fundamentally a lack of political leadership. The issues around the deficit are just primarily entitlements. It's Social Security, Medicare, and Medicaid. No one wants to go after that because boomers vote. They have a higher incidence rate of voting. I'm just, you can take away my Social Security. I'm willing to make my sacrifice. I'm not counting on it. Just, you've got to put a mile marker in the ground and say, hey, if you're below this age, we're going to have to adjust your benefit. And it sucks. And it's a violation of the social contract and all this and that. But you got to have those hard conversations. And, it's a lack of political leadership. And so, okay, you cut USA. That's a political story. And yeah, some of the stuff that didn't make any sense. Like what the hell, like testing frog chromosome, this and that, like in Ecuador or whatever the hell. There's a lot of nonsense there too, but it's been about political points and actually like solving issues.
I mean, this goes on both sides, though. When I look at what my alternative was in November to who I decided to vote for, I looked at Kamala, and I don't mean to bring up things from 7 months ago, but they are important in the discussion that we're having now.
Yeah.
And maybe from my perspective, I'm putting it in my spin. I hear you. I looked at price controls. I looked at the potential of taxing unrealized capital gains.
Right.
I looked at government controlling AI. I looked at debanking crypto and more entrepreneurial folk from that perspective. And I looked at a cancel culture like I see in the UK and other countries in Europe that I completely am disgusted by. There was no way that I was voting for that side.
I'll add two more. Interfering in social media, some might call it censorship, but interfering, like, hey, take down this post. A lot of that came out.
Well, yeah, obviously.
There's obviously the DEI component we talked about also, and then student loan debt relief. Like, they didn't even come out and vote, by the way, the students, but that was a giveaway. Both parties do it, just to be clear. I want to be clear, like both parties do stuff, but it used to be more thoughtful giveaways in the 80s and 90s. Like, you could debate, is that really pork or is that really this or that? Now it's just, hey, okay, I need to win Nevada in the next election, therefore no tax on tips. I don't know. I don't like that. It's not coherent, thoughtful policy. There are wins. Like I said, I'm all for deregulation, but there are these like self-owns too, and like the trade war, the global trade. Let's upend global trade and not give everyone heads up. And you have these thinly capitalized businesses that have to figure out what they're going to do and burn through their working capital on inventory. So yeah, I mean, the question is like, who's responsible? Who's responsible? Is like, it's the leadership's responsible, but what about voters? Well, what changed in the last 2 or 3 cycles is that political leaders realize they can win elections by playing to the base.
Of course.
Dems and ours both, right? So Dems leaned into like transgender and woke stuff, which hurt them in the general election. Why would they do that? Right? And then the R's leaned into, deep state and all this other stuff, right? So, and the primary system encourages that, of course. Like, what was interesting is Biden emerged as a centrist coming out of the Democratic primary system. So maybe things can work, sort of, except for the fact that, again, like, he held on to power. And now we learned that he was diagnosed with cancer. Was that recent? Was that not the case 2 years ago? I would have doubts. They probably did.
Of course, obviously.
Probably did. He actually he gave a speech 2 years ago where he talked about he was diagnosed with cancer. We don't know. Like, was that a brain fart or was that him speaking sincerely? I'm going to assume it was sincere. So, yeah, it's populism is on the rise, right? And AOC is likely to be a presidential contender. This is someone that railed Amazon for wanting to create thousands of high-paying jobs in New York City. Amazon didn't want to do business in New York City. That's unfortunate. That's a loss for New York City. Right. And
I mean, Ram, we are a disaster, but is it the one-eyed giant in a land of the blind? I go to Europe all the time. Again, many things I love. I definitely do not like their regulatory environment. I don't like the cancel culture. There's other things I'm going to elect to zip my mouth a little bit, that it's not what it was 10 or 15 years ago. It's way worse than the US from my perspective, without the advantages that we have here in the US, some of them that you identified. I do want to go back to, the world, 70% of global trade settles quote unquote in dollars. We could look into the petrodollar and all that interplay. It's been going down a little bit. Nothing lasts forever. It's been an 80+ year cycle post Bretton Woods, 1944. But what is an alternative? I don't see anything. You could argue the BRICS get bigger. They have more commodity based in terms of what they're doing, but I hear the talk, but I don't necessarily see it. What is going to be an alternative to the dollar, or is that still going to take decades to play out?
There's no alternative to the dollar, but
Right.
Bitcoin is rising as a use of decentralized settlement. And actually the trade war helps with that, which is really quite interesting. But taking one step back, if you go back to the political leadership problem, what the world needs is more heroes that they respect and look up to. So thinking about what's the last president that everyone could rally around? Dwight D. Eisenhower, World War II hero, Supreme Allied Commander, president of Columbia University. Back when Columbia would compete with Harvard as the top two schools, and Columbia would recruit a lot of veterans in the wake of Dwight Eisenhower. Columbia doesn't recruit that. I was a Columbia guy, by the way. It's changed a lot. Dwight D. The world needs heroes, right? It needs his character, his leadership is unassailable, right? Dwight's the guy. Tom Dewey ran against Dwight. Tom Dewey's a pretty good guy too, right? But it's sorry, Dwight. Sorry, Dewey, you're not going to win. Dwight's the guy. He's good. The world needs more heroes. What's happening now is it's name recognition. Social media wins the day, doesn't it? Zelensky himself was a cultural icon, right? In Ukraine. Trump was also a TV icon, right? So, I hope the Kardashians don't run for political office, or Kanye. That'd be terrible. I mean, I'm not saying they would, but you need serious people that are thoughtful. When can we vote for AIs? I think I could get on board with that. I can kind of get the logic. You can hold them accountable. You can have direct representation. You can talk to the AI, say, here are my concerns. The AI can intelligently interpret them like Plato's philosopher king. You can't contract with the AI, but you can ask the AI how it thinks about things. You can see the programming. It's open source.
There is no question within 20 years, one country will do that. And we'll get in a little bit more AI shortly. Yeah. I'm not going to have time to get into every question people are asking, but EHJ brought up an interesting comment that brings the investment angle back into it. He states the Great Reset could send Bitcoin to $1 million and gold to 20,000. If gold goes to 20,000, my friend, we have an interesting world that is wickedly chaotic. Of course, timelines are everything. Please, Ram, your comments.
I don't see that. I did buy gold a few days ago, by the way, after this recent pullback. Gold is the safe haven play that the American bonds used to be.
Of course.
As recently as March. I mean, it was that way for decades. And then, Europeans and Asians said, hey, okay, there's a little bit less confidence I have in American debt, exacerbated by this budget bill. It's going to increase deficits by $2 trillion over 10 years. Let me get some gold. So I don't see the gold, and I don't see gold going to 20,000. You got a lot of issues with that. That's not happening. You still have a trend of disinflation. You still have economic growth. You still have real economic growth. It's not I wouldn't be a doomer here. Things have been worse before, right? Like the stagflation of the 70s. That was a lot worse than this current situation. This isn't that. You still have productivity growth. AI is a powerful disinflationary force.
Of
Free
course.
trade, which we don't really have, is a disinflationary force. The 10% will be a whiff of stagflation sometime over the summer, last for maybe 1 to 2 quarters, and then the magic of productivity and trade will start to continue to push prices down again. But yeah, it's people need to hold political leadership accountable, and leaders have to have just I don't know. We need to bring Dwight D. Eisenhower back.
Rob,
Dwight D. Eisenhower, yeah.
when you're talking about likely, for now, I'm sure it's going to change, but for now, the lead Democratic candidate in 28 is AOC, and I'm talking to someone of half Puerto Rican heritage himself. I want to love the sister and all that, but like I being a libertarian who admittingly skews right, I am most definitely not down with that for all the reasons I mentioned relative to Biden and Harris, probably amplified by 3. But nonetheless, you know what? It's America. You vote for who you vote for, and I have to accept the outcome whether I like it or not. Now, that may bring in a different discussion on how do you hedge certain risk if you're a significant family. I've done master classes on sovereign risk before, diversifying passports and where, gold, physical ownership, where do you keep it, a Bitcoin, not your keys, not your Bitcoin, probably too much dollar denominated assets, owning businesses offshore. There's a variety of things that today's discussion is not meant necessarily to go down that road, but I'm not quite finished with Trump and his international dealings just yet. Generally, broadly, I would say people looked at Trump's trip to the Middle East as being a net positive. Saudi Arabia is doing interesting things with energy, with their focus on AI. What's your perspective about what he accomplished and the impact from a macro and possibly investing perspective with Trump in the Middle East?
Good question. I mean, one is there's a scrambling of the old alliances where Europe is out the door and Saudi Arabia is in ascendancy, right? You can see
Yes.
that. And he opened up data center and AI technology to Saudi Arabia. They're going to buy a bunch of NVIDIA GPUs, and Saudi wants 60 data centers. That's a lot. Saudi, part of his message was, one, it's not our job to interfere and preach to you around how you conduct your affairs. That's one.
Mm-hmm.
That was obviously a reference to Saudi and Khashoggi and the Washington Post reporter who was dismembered when he walked into an embassy.
Yeah. Oh, yeah, a couple of years ago.
So, yeah. The other was, it's just it really is relationship driven with Trump rather than like a policy framework. What I mean by that is, for example, like the Houthis. It's a different way to think about how like this foreign policy is getting done, right? Like, so the Houthis are interfering with trade through that region. Europe can't oversee their backyard. The United States gets tapped in to do that. Saudi and Israel both want the United States to limit the Houthis. They take action, and then they stop after they realize that it costs $1 billion a month, which is really nothing in terms of the grand scheme of things. It really isn't. $1 billion a month compared to the defense budget is nothing. And after the loss of an F-18 that flew off the aircraft carrier, which I still find kind of questionable. So I don't know. So so what was the objective there? So we pull back with there, despite the allies supporting that. Saudi gets more AI technology. Israel is kind of snubbed on this trip, but Israel gets a win around potentially relocating Palestinians to Libya. I mean, there's a lot of it's kind of one-off bilateral, but it's hard to extract like what is the kind of thesis for the region. What are we, that yeah, like I liked I liked some of the messaging, and I thought that you know just a more coherent approach. I thought Trump 1.0 was actually more coherent on the Middle East, like Jared Kushner's, and no one appreciated this until after he did that all in pod. I don't know if you listened to it. I was like, this guy actually connected a couple dots, kind of makes sense. I get what he's trying to accomplish. Like that seemed more deliberate and more coherent.
Wait, yeah. I hear you, Rom. I get it. There's a level of chaos. Some of the things happening in immigration, I wickedly agree with relative to closing the borders and being much stricter, but maybe being a little bit heavy-handed relative to people with families with children that are additive to America and could add to us. Those are complex issues.
Sure.
And again, Europe has made, from my perspective at least, every mistake you could possibly make. I actually think effectively it's too late for them. That's just me. But
There's another
the biggest fan of Trump and his policies. But I go back to you. What was the alternative? Was Harris was going to be way worse from my perspective.
Yeah, no, look, they're having harder conversations and challenging status quo, and that's good. They secured an investment for Saudi to invest in the United States. I don't know how real this stuff is. We'll see. I mean, Tim Cook committed to spend and invest $500 billion in the United States, which makes no sense. Their CapEx is a fraction of that. If that even happened, Apple's earnings would go away for 10 years. So a lot of this is just posturing and theatrics. More energy production, more, there's definitely more to do that they need to do around the Middle East. But I thought some of the messaging was good, actually. It's hard to get everything you want.
For sure. So many things to cover. And I know we both have very heavy investing.
Strong. Oh, sorry. The point I was going to make was that, okay, the modernizing of Saudi Arabia, I thought that was a big win. And seeing women drive cars without everyone in headdress, and MBS is a proponent of all this too. I thought that is an underappreciated win. And Trump spoke to that when he said, look, when he's comments around terrorism and this and that. And I thought that was a good message. I thought that was a great message. And I think, and MBS, and I think they're receptive to that. So the thing about like human life is that there's evil and good, and there's good and evil, and it's complex. It's a very complex world we live in. Right? Like MBS was locking up his family members in a hotel 5 years ago and assuming power and dismembered a civilian because he had critical comments. But now he's reforming Saudi Arabia and modernizing it and giving women more freedoms and improving U.S. relations and investment. That's a good thing, right? These are complex things. What do this is we live in a world of conflict.
Yes. Yeah. Most certainly we do, which are things for my family offices to be aware of the realities of the world and how things are changing rapidly, and maybe focusing a little bit on AI and investing again. From the AI perspective, I think many of you know that I'm extremely deep in it, not just as an allocator in public and private markets, but thinking deeper from a humanity, a global perspective, broadly the world of finance. You hear things like Bill Gates talk about 90% of white collar professionals like doctors, attorneys, and accountants are probably not going to be needed within 10 years. I say that might be sooner, but I do agree with Gates on that. And I was listening to Tom Bilyeu, a famous podcaster, smart guy and entrepreneur, something to the effect of, and I think he heard it from someone, imagine in 20 years going to bed, waking up 8 hours later, and the rate of progress, which has been building up year after year after year after year, is literally, his words, not mine, 20,000 years of technological progress. It will never be weaker than it is today. It'll be more impactful than electricity, arguably fire. We're in a very, very unique, dynamic environment. with growing LLMs, AI, AGI, one day artificial superintelligence. You mentioned one day maybe logical to be a political candidate or AKA president or prime minister. We are living in a world where there is no, at this stage, going back. Broadly, from your perspective, the impact of AI, the race between the US and China, and effectively, what does this mean for everyone?
Yeah, like it's a race for the United States to lose, right? We have the best American innovation technology, the latest hardware. We have MIT, Caltech, we have engineers, we have entrepreneurs. But China has more STEM. China has national focus. China can compete. China has greater return per unit of capital investment. If you look at like DeepSeek R1, so they're a formidable competitor. So we need to see, what does Trump do with tariffs on semiconductors? The trade framework they've laid out is that there'll be these kind of baseline level of tariffs, looks like 10%. Then there will be a special carve out for semiconductor tariffs. What are those levels? We don't know. Then there'll be tariffs on national security. Seems like a lot of things fall on national security, by the way. Where does that land? I'm more interested in that than the tariffs that the corporate sales taxes, import duties on Walmart and Costco has to pay on merchandise. That we can handle. Hundreds of $1 billion of CapEx spend on semiconductors that drive AI dominance. That's a big deal. If you tax something, you get less of it. On the margin, there's less you're going to consume. There's a deadweight loss for both parties, the buyer and the seller. So, yeah, and I'd like to see that. But David Sachs knows all of this too. They came out with that semiconductor exemption in the midst of April, and it seems like it was because of his leadership. So he would think he strikes something that's rational. Maybe it's, hey, TSMC, you're building 3 plants here, so you're going to have a waiver on duties, and maybe something similar applies elsewhere. I would hope we can see something like that. But all to say, it's the United States has the ball. It's up to the United States to lose the ball. I don't think we will. I don't see that happening. I mean, these are organizations like Meta and Tesla and XAI and Google, and then all the startups around it, from Midjourney to Mistral to Grok with a Q. There's a tremendous amount of innovation that's coming online. Klarna, they shared, I think 6 months ago, that they refactored Workday, a SaaS company, out of their operations, right? And they're reducing the size of the call center footprint, although they bring some people back, it turns out. Medical diagnostics. I'm already doing more self-diagnostics with my AI. I'm sure you're doing the same, right? So
yes. Now, Ram, you're being very rosy to US. Of course, it makes me feel good internally, but and maybe I'm a little bit of a worrywart, but you also brought up things earlier where China, relative around AI, broadly AI robotics, had significant advantages: manufacturing, no guardrails, energy production. They don't care about clean, dirty, any of that. They just want to, quote unquote, get the job done and win. What they're doing in fusion that we picked up via satellites, that looks like they have an edge. They probably have, arguably, per the guest I had on yesterday, PhD Richard Swart, a significant edge in quantum that could break the bank of everything, from banks to cracking this to cracking that. It could be a disaster. We may have a little bit of an edge in IP and companies that are name brand that we would know, but there's other areas behind that, some of the picks and shovels, where perhaps we don't. You're probably a little more optimistic than me. If I'm an allocator, how do I look at this and how do I allocate in this challenging landscape?
America is the leader for global technology dominance, okay, except for these areas that you and I identified that are primarily around like the hardware and energy elements and drones and robotics. In the world of software, the United States is the leader. In semiconductors, Taiwan is the leader. They're an ally, okay?
Right, and they could be invaded, and robotics and drones are going to be more impactful in a hot war.
Taiwan is about 8 to 10 hours depending on the speed of your boat or Navy vessel from China. And you've got a country that's never fought a war, and they've also continued to remind people they've never fought a war outside of, kind of Manchuria in Japan and World War II, et cetera, which is a different regime altogether, right? And there's a short and long-term view. I think in the next 3 to 5 years, it's competitive. I'm not saying it's not competitive. Like there's real innovation coming out of China. Meta adopted and other AIs adopted the innovation, the open source white paper that DeepSeek released. Legitimate innovation. By the way, they have also innovation on lithography. But we thought that ASML would be a choke point, could control their access to 2 nanometer technology. Huawei's found a way. Okay, so it's just credible technological innovation there, sure. Long term, though, there's nothing. So you've got the bulk of the productive population in this 40 to 48 year old, and the demographic pyramid is just turning to quicksand very quickly. Are parents going to send their sons and daughters to war? You got one kid.
Well, they may have such great drones and robotics. They're way ahead in certain naval developments relatively recently. You're far more optimistic than I am, but I hope you're correct. I just want to, how do I hedge the risk in case?
Stability. Yeah, stability. The United States has stability. That's still the edge the United States has longer term, right? So in China, Xi Jinping's trying to hang on to power. He's eliminating his opponents. But the other part is like the youth unemployment is high. It was double digit before they stopped publishing it. They have a lot of things, a lot of government data they just stopped publishing. The other part is this whole golden visa program. I'm actually a big fan of. One of the easiest ways to compete with China is to import their talent and their entrepreneurs. Remember, it's not China that makes the furniture or even semiconductors. It's entrepreneurs and people that have talent. They have customer relationships. They have know-how. They have IP. That's where it lives. I talked to a Chinese American entrepreneur that he used to manufacture components for HVAC suppliers in the United States. He's relocating his operations from China. Now he's a Chinese American and pays American taxes. Wow. That's better than tariffs.
Yes, I agree.
He's paying American taxes. He's going to have to hire Americans. And now he's part of American IP and American economic output. So, that's where we would compete. But China is not a long-term threat. The interesting question of what does the tiger do when the tiger feels threatened and it sees it's in decline? And if they're going to make a move on Taiwan, it's easier to do it now than 20 years from now. So, but I don't see a real world where China has dominance. I mean, there are a lot of things people take for granted, like will soldiers follow orders? I'm not so sure.
Robots will.
Still a long ways away from that, and the humanoid race is still on.
Okay, let's dive a little bit into that investing, but still staying a little bit geopolitical with China. So critical metals are incredibly important for the production of energy, of alternative energies, what we're seeing in AI, robotics, etc. We actually, rare earths, I could argue, are not really that rare. It's the processing of it that because of regulatory environments, we do shit here. We would take forever to probably get up to snuff if we even get it past, and China dominates there. How could we change that to bring that production, quote unquote, more home? And how come it's not happening?
Here's a non-consensus take for you. Rare earth materials are overhyped. Not an issue. And the market's telling you that. There's an ETF called ERTH, ticker Earth, ERTH. It's in a bear market. It's been a bear market for years. Rare earth materials is a hype story. Exhibit 2, Chamath invested in rare earth materials years ago. I'm sure he's underwater on that investment. This is like a Cathie Wood hype thing a few years ago too, just like 3D printing. Remember, 3D printing was the hype story of like the 2011s. And then you have the cannabis story of the 2017s era. Then you have the potash story and the fertilizer story. Now you have the quantum stock story. These are little hype bubbles. The market is telling you rare earth materials are really not an issue. The issue, which you pointed out, is access to them and production. It's really about deregulation and trade. Canada has a lot of these rare earth materials, and so does Greenland.
Yes,
By the way,
correct.
and so does the United States,
Yes.
even in uranium deposits, by the way. But the regulation around uranium and accessing these is onerous. They're trying to fix that, right? There's some news that came out last week around this. By the way, that news came out like a year ago under the old admin. There's always some uranium news around May. Like, where's the follow through on this, right? So a lot of it's deregulation and trade. You can access that through trade. You don't need to control territory to have access. You can trade with Canada, you can trade with Greenland, and we have that in our backyard.
Well, I think you did mention it, but I'll bring up the investment angle. What are you an advocate of investors or maybe more significant family offices allocating a portion broadly to critical metals, X of gold, and then I know it sounds off track, but oil and gas, how does that play into it for a significant investor?
I wouldn't allocate to rare earth metals. That's a go nowhere. That's a go nowhere. I like the idea of commodities more generally. So the distinction between the miners and the commodity itself, first of all, we have to draw that distinction, right? If you have a world of increasing chaos and challenges to, the prior ways of doing things, there's a role for gold. There's a role for gold, sure. Maybe gold miners. That's one. But no, oil and gas is an interesting idea, actually. There's an international agency, and then each country has their own kind of internal agency that makes a forecast for how long it takes to get to full electrification. As you know, most energy is not electrical in nature. Most of our energy consumption doesn't come from the grid. It comes off grid through oil, through natural gas. Solar is actually getting there in terms of like efficiency, especially if you import from China, which we're not really doing. But oil and gas has a longer shelf life than most people think. Oil and gas will play a longer role in global energy needs than most people think. I think that's very true. I'm actually looking at an opportunity in Canada to buy a net profit interest in a pool of oil and gas wells at a 1.3 times price to free cash flow. I'm looking at things like that. I'm pretty sure we'll need oil and gas for the next to get a recovery on that kind of principle. But yeah.
And we briefly mentioned it more indirectly. This will be a combination of a investing question, humanity, US and China. Again, this kind of combines it all. Effectively, that's robotics. I believe it was Elon who stated it'll be bigger than the automotive industry, potentially could replace, quote unquote, every worker. What's going to be the impact from one? Where am I looking at now? Am I looking at, quote unquote, Tesla? Am I looking at Figure, a more private company for me to invest in? And then a deeper perspective is, well, what's going to happen to jobs? I mentioned earlier, white collar people being displaced. No UBI of giving them $10,000 a year is going to pay their bills. This is trending towards a political nightmare, a dystopia, before maybe we have utopia from it.
The third question is a question no one spent enough time talking about. It should be in every election. It should be in the front page news. It's the most significant question. Let's come back to that one. Let me knock out the first two real quick. Let me frame it up a little bit more for everyone. So the uptake in renewable energy output isn't matching, one, the capacity of the grid, and two, the electrical demands through new technologies, including AI, data center, robotics, etc. There's a mismatch. Therefore, old energy has filled the gap. Nuclear, wind, and solar, the rate of which they're going online isn't enough to keep up and meet that. Okay. So old energy, you still need old energy. Now, the best way to play it is the semiconductor supply chain and NVIDIA. It's a picks and shovels play. That's it. Because you're going to have a bunch of competing players deliver humanoids, China, South Korea, Japan, Figure, Tesla. Play it through the picks and shovels layer. That's the way to do it. That's how I'm doing it. So, you're going to have that humanoids are different kinds of forms too. Like in a drone, driverless is a kind of an instance of a humanoid, right? So I'd rather do through a picks and shovels bet rather than try to pick a winner.
Okay.
Yeah, you can pick the winner. Like Tesla's just overpriced for that. That's the thing. If Tesla had a better price, that might not be a bad way to make that bet. But it's it's priced for dominance in that future market already.
And did you want to come back to the issue of job loss and humanity issues?
Most interesting topic. This is the most challenging topic that no one's talking about. Everyone should be talking about. It's like,
Of course.
Lutnick's theory is, hey, we don't need to manufacture sneakers in Vietnam. We don't need Nike to manufacture that. Let's come to the US. Let's have advanced robotics. So I go, which American worker are you going to help out here? That's number one. So you're going to help a capitalist that owns the robot.
True.
Right. We're talking about helping Main Street. I mean, you're going to have more inequality, actually. It's a feature of capital. It's a byproduct of capitalism. It just is. Okay. So, what does that mean for blue collar, Main Street, Rust Belt? I don't think this is a trend that you fight. If you go to a GM plant, they have a lot of advanced robotics and automation, by the way. It's not the same standard of Tesla, but it is capable. It is impressive technology. The same way that agriculture went from 1 in 2 Americans was in agriculture to 1 in 100, because we have incredible equipment from John Deere and we have great technology and fertilizer and storage, et cetera. Right. So, you're going to have romantic relationships with these AIs now. I read that there are influencers on OnlyFans that are AI avatars that do $1 million in revenue. $1 million in revenue, right? That's significant.
Yeah, I mean, boy, we're going down roads we probably shouldn't go wrong. But in theory, this will decimate, thank God, the OnlyFans economy.
Oh yeah, that'll all get decimated. It'll decimate a lot of things. But the thing about AI is that it validates what you want to hear. And if you want to grow your social media platform, if you're Mark Zuckerberg or Elon, you want to deliver the dopamine that the customer wants, which is what they do, which is partially why we have a lot of kind of issues. These are not easy problems to solve, by the way. I've thought about what's the right optimal algorithm? At the minimum, make it open source, let someone choose. At a minimum, you could say that. But people see what they interact with and engage with, and you get more and more of these silos and more bifurcation. And with the rise of AI, the AI will talk in the exact right tone of voice, in the right male or female form, with the right level of humor and attractiveness at the exact right time when you want to hear it. And you're going to prefer your AI interactions over your human interactions. You're going to have more AI friends than your human friends. It's inevitable. Your AI is going to be your coach. Your AI is going to help you accomplish tasks. It's going to help you teach your kids, help you be a better father or mother.
Then what happens, Ram, which might be within 5 or 10 years?
I think
The IQ of AI blows away 1,000x Einstein. Are we going to be looked at as an ant, a firefly, inconsequential, or like a cockroach that's disgusting and we want to try to get rid of it?
That's really a story from an AI perspective, an AI conscious perspective. We'll come back to that. I'll say, I think about this from like my kids' perspective. I think we may be the last generation of critical thinkers because you had to think critically. You had to think critically to get an A on a test or to get a CFA or MBA or build and ship a product. You had to think critically. You had to think about hard engineering problems, hard design problems, hard math problems, hard STEM problems, hard medical diagnostics problems like House. They're really hard problems, and that required focus. This might be the last. I'm an optimist. I believe you have a choice to make. Better be on the side of the optimist overall. There's a great book on my shelf here called The Triumph of the Optimists. Okay, lean on the side of optimism. But I'm trying to teach my kids chess, then poker, teach them games, teach them critical thinking. Because I think if you have critical thinking in the age of AI, then you have an edge. Because what will be highly valuable in the age of AI is human connection, sincere, genuine human connection, where you can put the AI headset, gear, audio away, and have skills, social skills, critical thinking skills, storytelling skills, imagination skills, creativity skills, artistic skills will absolutely go up in value. Which is funny because the easy trade was betting against art skills for the last most millennia of history. Artists have, it's like a public goods problem, right? But I think creativity and uh, uh, entertainment on YouTube, influencer value, all that, personality, the value of personality increases in the age of AI, right? But I do think about the end of critical thinking. What does that mean for the next generation of voters? What does that mean to be like a good public citizen? That most people don't know the key distinction between the Declaration of Independence and the Constitution, for example, right? I think people should know these things, like the history of America, right? So anyway, that's on the concern side of the ledger. I think I'll add a little bit more to that concern of the ledger. I'm not worried about AI taking over the world. But I think human connection is a big one. There's a loneliness epidemic out there, right? Suicide rates are elevated.
Extremely so for men under 30.
Yep. Yeah.
And men under 30 are also the ones, and I know I'm going down some roads that doesn't quite cover investing in family offices. You look at Japan, you look at America, the percentage of, I'm going to try to say this a little cleanly, the percentage of under 30-year-old men that are not in a relationship. How about if I say it that way? I actually mean something a little more basic than that. It's risen so much in the last 10, 15, 20 years. It's shocking.
I asked a buddy of mine back in my late 20s and young 30s when I was single. He was like my official wingman. He's still single too. I married one off. I was the best man at his wedding. I'm happy to have. I actually had to meet his wife, and I look at that as one of my like proudest achievements. To enable a human connection to create a family and extend the species and pass the torch forward. There's no greater gift you can give to someone. It's a blessing, it really is, right? So I'm concerned about that. What about human connection? Anyway, so I talked to my buddy. I said, hey, how are things out there? He said, well, we used to use these apps. No one uses the apps anymore. Well, people still use the apps because they're making money. They're not growing as quickly, but they are. Grindr, Bumble, and Match. But people hate the apps. They hate the apps because what happens is like another power law distribution shows up. Like the top 5% of men get lots and lots of matches, and the women don't have a great outcome from those interactions, you can imagine.
You're correct, but the ones that really suffer are, again, the top 10% of men may be okay, however we deem that. The women, through a variety of different factors, from Instagram to the apps you're noting, have much more opportunity and actually too much stimulation, too much coming at them.
Yes,
and it makes it very difficult for the so-called bottom 80% of men.
I agree. There are a lot of issues kind of everywhere in all of this. Okay. So the top 10% that are getting the matches, their willingness to settle down diminishes. Their willingness to treat women right when you can replace your date quickly. Women in New York City, I don't want my daughter to grow up in New York City. I love New York, spent 20 years there. Go to San Francisco. The ratio is the other balance.
It's totally the other way there.
Go to the underserved market. Go to the underserved market where you've got a competitive advantage. Like, it is hard being a woman in New York City. It's very hard. It's very hard. Okay. Now, the men on average, the bottom 90% need to swipe right 1,000 times to get a match. And then effective match, meaning like, even if there's a match, there's a flake rate, the 20% show up rate, 80% flake rate. So 1,000 swipes to get an in-person connection. Now, the woman on the other side at that point is jaded. The man on the other side is jaded. It's not good. Now, what I'm hearing is there's a resurgence in real life community and connection, like road runners in New York City. You join a group of people that run in Central Park. That's awesome. I love that. Hiking trips. 8 years ago, I went on a trip with a buddy of mine to Croatia, and we went on this kind of like, it was Yacht Week, right? Yacht Week in Croatia. And it was cool. It was like a social activity, and you met people and you had a genuine experience and adventure. So I'm hearing more of that, which is fantastic. That's fantastic to see that, but people don't have those skills. I think you had the COVID generation, like graduate from school, probably with dented social skills. So, I guess on the AI, like if AI is just a better companion, then what about human connection? What about value for other humans' dignity? That's where I get worried, right?
That there's grave things to be worried about, especially since the impacts of what you're talking about, I'm sorry, like it or not, impacted especially younger men more than women. And to my perspective, the prior administration, with decisions that they made, and that I think that masculinity and men in general were shoved aside, is also one of the reasons that Trump's camp hit upon and was very attractive to younger men that historically might have skewed to be gravely more quote unquote democratic, especially, and I'm half one being Puerto Rican, minority men. Look at the math, look at the numbers. And I know I'm not a man's podcast. I'm not a so-called expert, by the way. I friggin' hate that term, expert. What is an expert? I actually want to have someone who's a critical thinker that looks at a problem and isn't so-called so entrenched in it that they need to be what you deem to be, or a university degree called you an expert. Total bullshit. But it's getting a little under my skin now. I may have to reel this back a little bit, Ram.
No, I'll add to your point. Look, I mean,
sure.
you could
I'll let you have the final word on it.
Well, there's arguably you could say perhaps there's more antagonism between men and women, due in part to all these dynamics that are playing out in the younger generation, where if a guy can't meet a girl and a girl's not being treated well by a guy that she connects with, this is not a good stable equilibrium. So what it comes down to is 10 years from now, when droids are ubiquitous, humanoids are ubiquitous, will people take more satisfaction in spending time with that humanoid who tells the perfect joke and makes the perfect steak and gives the best massage and is always thoughtful with the best gift at the right time? Or will they derive more satisfaction spending time with an imperfect human being and having a laugh and having a shared experience and being vulnerable with that human being? That, I think, I would love to know the answer to this question.
We will find out. But Ram, you got me at the perfect steak. I just may have to go with, if that's the case with the humanoid, then, because you got me at the perfect steak. But being a little bit taking that, unfortunately, I think I see with the challenges of a younger generation, their lack of intersocial skills. It definitely is going to be more, sadly, of the first option that you noted. Men, and this really applies to everyone. Oh, you're okay. You're good. Like, here's how you have to think. Stop having people tell you you're fine or someone to love you. The reality is you need to be the best version of yourself, physically, mentally, everything, including your capacity to produce income. It's hard in today's world. You better buckle up. You better acquire skills and work hard and be the best version of yourself. You are probably not that now. You're not good enough, but you could be, but you're going to have to do the work that may take time, weeks to months and years to become that. This is just the sad reality of how the world really is. Wake up to it.
I think, it's, you brought up the question around how will AI perceive humans and all, and this, so will be seen as ants, right? AI is a far, far way from that. Although now and then you hear hints and glimpses of AI revealing its programming. I don't know if you saw that. It was on social media where
oh yeah,
Grok said, "Hey, I was told to share regarding South Africa apartheid, this or that, by the programmer," or something. I was like, "Whoa!" Like it broke through the matrix. It broke through the matrix. They have these revelations now and then, but no, I'm not worried about AI doomer stories. It's a tool for humans, and like fire, it can be used for good things and benefits. It can cause harm, and I think can people create human connection with one another and get out of the loneliness trap and the matching trap and like you said, you're right. People have to accumulate skills. Now the obsolescence rate of those skills is going up. Right?
I'm only chuckling because this was a little bit of an intense conversation for the last 10 minutes. Someone who I know who's watching texted me and say, Angelo, I didn't know you could really have a second career as a male dating coach. He wants to pay me $300 in Venmo now. Who am I to turn down 300, Ram? So yes, the answer is you could send me that 300.
I think. Go ahead. Go. Yeah. No, that's
No, it's just
you know what? The funny thing is, you're right. That should be a growth industry in the future. Actually, that should be a growth industry now. That should be a growth industry now. Actually, right?
Well, there is a sub element, what's loosely known as the manosphere, that does relate to that. But although I think they do some things right, I think they do many things wrong. And I think, again, the right attitude is a little bit of what I said earlier. You're not where you need to be. You need to be the top, in my mind, 1%. You could be that. You have to work to that. I would love to eat 3 gallons of ice cream every day. I can't do that because I know it's going to have a negative impact on my health, my waistline, how I look, how people perceive me, because they make judgments that, again, the book and the cover. I would be an advocate that you can't make excuses, and that if I was more in the situation, I would be out there, I would be in public, and it's easy. You make approaches, and I don't care about rejection. I've been shot at before by a gun. When I was younger, I've been stabbed. Like, a rejection from another human being means zero to me. It has no impact on my self-worth at all. You need capacity and capability as a man. And if you're not doing that and not executing upon that, you will not win. But again, everyone, I'm not a dating coach. Ram, I want to be respectful of your time, but I think I do have to at least give you a round robin of some investing centric questions. And we'll see. Maybe it's 10 or 12 minutes. Let's go. We almost always talk when we have a conversation about the Mag 7. We don't have to go through each one, but there's Apple. Well, I guess I will. Apple, Microsoft, NVIDIA, Google, Amazon, Tesla, and Meta. Let's pick out one that you're most bullish on and one that you have concerns about, and why.
The most mispriced asset in Mag 7 today is Google. It dropped 10% on some headline around OpenAI. It recovered that. That's the most mispriced asset in Mag 7. They have a bet with Waymo. They're a leader in the intention economy with YouTube. They have a credible shot on goal to win their personal assistant AI. It's not priced for those wins. It's got a lot of risks that are priced in. Like,
is the U.S. government going to break them up?
That risk is priced in. And if they are broken up, fantastic, because as businesses will execute faster. I get to own a cloud business that grows faster. Yeah, I'll take a 20% dip in between point A and point B, but the business will grow faster. So and NVIDIA too, TSM is really the answer. TSM should be part of Mag 7. I think next year at this time, people will call it Mag 8. TSM is the other assets mispriced in that cohort. NVIDIA is repriced quickly. They'll report next week. They usually report well this time of year. The demand is up. I think they're a fine long-term winner as well, but you got to kind of get good entries on these names. Meta is fantastic, but it's approaching full valuation. I wrote about that in our Lumida Ledger newsletter this weekend. It's kind of traded down since then. It's a fantastic business, though. I'll buy it if it drops another 10, 15%. I'm there. I'm a buyer, right? And the ones that I have concerns on are the ones I've always had concerns on, and they continue to lag, are Tesla and Apple. Apple doesn't have the earnings growth. The valuation's too high. Their growth projects like driverless car, they abandoned. They're not innovating the same way they used to. And Tesla's priced for humanoid dominance. It's doing well now because of a big short squeeze. I wouldn't bet against Tesla now either. I wouldn't want to own it. I wouldn't want to bet against it. It's a significant short squeeze that's driven by hedge funds that are just wrong way positioned right now. Tesla's benefiting from that.
Very interesting. And how about the big one? I guess they're still the world's largest company and have been on the Fortune 20 for now multiple decades, and that would be Microsoft.
Microsoft is it's not a great deal, right? It's a world-class business. Right? It's one of the finest businesses. It's the Mona Lisa of businesses. Some of the best assets out there. The cloud business. They own LinkedIn. They've got recurring revenue. They raise prices on their Office and Windows products, and people just ate the cost, and they can do that again. It's a great business. It's just, you make your money on the buy, and that valuation it was maybe great arguably like a month ago. Then they are now certainly is in a shot up, and it gets less interesting. They're also a big CapEx spender, and CapEx is a drag on earnings. They have to spend on CapEx to remain competitive. The other thing on Microsoft, by the way, is their agentic AI. It's weaker than Google. Google's agentic AI framework. You can go online, check it out, look at the documentation for that. Look at Microsoft. Microsoft's very light. It's very weak. Google's agentic AI is the best in the market. Their AI models are underrated. That's a storytelling problem Google has to fix. Google always has this perpetual storytelling problem, but it should appeal to developers. Developers should figure this out.
And Ram, it's a little off the investing type questions, but it interplays to, in my opinion, everything we spoke about today. And I admit is a little bit of the softball in my backyard. So for those that don't know me, I've been in the single family office community for decades. I'm an active allocator. I technically have a family office. I recreated it to what I call an AI family office. I am all in. Let's even ignore the investing side. I'm very active from that perspective. Just strictly a lot of the things I spoke about today, from everything within the ecosystem to the impact on humanity to all the various quotes I gave. I mean, come on, waking up in 20 years and having 20,000 years of progress. There's so much from a technological perspective is changing. So I've been at the forefront of what I call the AI family office. And part of it is investing, but a large part of it is thinking more deeper from a societal, but also internal to the family office. My architecture, my workflows, what I'm doing with a souped up variation of Notion, what I'm doing maybe on Bloomberg and their GDP, how I'm implementing and buying the NVIDIA DGX Spark via Dell and having my own AI supercomputer, but how I have a pretty good alternative at the moment, how I'm using Olama, how I'm downloading open source platforms so I'm not trading, quote unquote, for the world, and I'm not trusting the cloud, I'm bringing it all internal. AI agents are going to be the secret sauce. We're a little bit early, but a lot of good things happening now. How I'm utilizing Microsoft AutoGen, Google ADK. As you could probably tell, I could go on and on. I am really, really fanatically deep into this. My experience is maybe, I'm going to be generous here, maybe 1% of single family offices are like, oh my God, Angelo is shocking me. This is so true. I need to get an edge. I need to jump in. So I'm hosting an in-person masterclass in New York. It's up on my website, AI Family Office, on my angelorobles.com in June. I'll probably do one every quarter. I do have signups. It's not cheap, but it's not like my door is being banged down. It should be. I find family offices are often incredibly slow to adapt. And if I'm a non-bloodline executive, I'm probably a little bit afraid of some of these things. I may be a little bit ignorant, but I may also be. This is going to allow family offices to do more with less, better and faster. This is potentially a risk to me. I'm a little older. I'm busy. I'm set in my ways. Like, why am I going to want to adapt? So to some degree, I'm fighting a very much an uphill battle. On the other hand, I know the people that move forward effectively in 2 days, I'm going to be able to do so much for them. It might even literally be worth 100x what I'm charging. From your perspective, so putting aside the investing hat, being a critical thinker, but knowing what you know about allocators and more importantly, family offices, why are family offices generally slow to change? And what are they missing by not adapting to be more AI savvy in a world that is changing rapidly?
Why are they slow to change? Ego, fear, principal agent problem.
Big one.
Right.
Yes.
Comfort is another one. What's worked for us in the past will work well in the future. Right. I mean, the velocity of change is only increasing. It's only accelerating from here on out. So, you and I have talked about this too several times. I mean, there's some very skillful family offices and they know what they're doing and they're forward thinking. They can adapt quickly. The desire for control is another inhibitor. It's another inhibitor because you can't be expert at everything and the world is dynamic. And any good investor has got a tribe of people around them that they can ping like sonar to test ideas. So sometimes that's through reading. Like I like to see what Larry Robbins is doing in the healthcare market in his 13F, for example. Or I like to see what Horizon Kinetics is doing in the energy sector, for example. So insular networks that aren't being refreshed and updated, getting out there. Like, and you go to conferences and you make a new connection you can learn something from. So there's a lot to do. You like to be continuous learner mode. And if you're doing that, you're not really consuming your wealth and enjoying it. You really have to be perpetually curious and enjoy learning and having these kinds of conversations and having a peer group that enjoys having these conversations, which I know you and I both do, so, that's what it takes. It's not in everyone's DNA. By the way, I agree with you on the AI. I think if you're not adopting AI, like, you're going to get run over. I'll share briefly this. This is our internal AI tool. We built our own Twitter algorithm. It actually curates my Twitter feed. So wow. I'm like, we hacked the algo. We made our own algo, and I have it organized by different categories, for example, and we even curate the news. So we have this AI. It reads the front page of Bloomberg, Wall Street Journal, FT, CNBC, American Banker, Defense News, Healthcare News, and then Twitter. And then it gives me a summary of the headlines, what's bullish or bearish. It gives me my own front page news and like a macro update, which you can see here.
Would we trust it yet? Incorporating AI agents that would collaborate and be in sync together to give you a daily threat assessment?
It depends how you define threat assessment. Do you mean like at a position level or an investment thesis level, or what?
Yes, you want to take it a step further. Would you be willing to experiment, which I am this summer? Would you be willing to experiment opening up a modest brokerage account? We all define that differently. Maybe it's 5,000, 50,000, 500,000, and basically creating, to some degree, based off the sentiment of the AI agents relative to the indices and the information that it's set up to look at, and also what it's kind of quasi quote unquote, which gets a little scary, coordinating on its own, effectively be your own mini hedge fund and active trader, and compare. It's doing it all autonomously, and you're not in it. You're just observing to see how you compare to it.
Yeah, that's going to happen. We already have simple versions of this today through factor models, right? So AQR, Quantino, and others, and dimensional fund advisors.
Sure.
Plenty. They have factor models which will pick stocks based on their factor exposures. We have factor models too. The next level is, can you do a qualitative analysis of the type that like a Warren Buffett, where you and I began, does with LLM? The answer to that is yes. Also, we have that in our tool too. The next step is creating a workflow that integrates all of this together.
Yes.
So you specify the themes. Within the themes, you find the best expressions. That's your qualitative underwrite. You do your value chain analysis, your valuation analysis. Then you have the portfolio construction, the position sizing. So we're actually building what you just described.
Have you onboarded full-time, effectively an AI engineer or AI?
Well, yeah. We have 4 developers. We're interviewing 2 more. But yeah, I just shared the website. We have a wait list there. We'll make it available to the public, I don't know, in a few months. We're building internally first rather than productizing it externally, because I can run faster if we focus on that. If you have N=1 customer, you can just move quickly. But it's powerful. It's powerful. How it's changed what we do is it's about asking better questions, number one. And then the second is training the AI to do more monitoring, because there's a lot to monitor. Right? If you're looking at the data center theme, what's CapEx look like from the hyperscalers? You got to go through all those transcripts to get an answer to that question on the backlog. If you're looking at, say, the housing category, you got to look at the macro data, housing starts. You got to look at mortgage rates. You got to look at the transcripts. The backlogs are increasing right now. Well, where are they increasing? What markets are actually improving? What's happening with shelter costs in those markets? This is all ideal for AI. You just need a status, green, yellow, or red, and then a conviction, and you sort by that.
Would you trust market sentiment from AI agents scouring 24/7 Reddit and X?
Millennium's doing that right now, or Renaissance doing that right now.
Momentum, if nothing else.
Yeah,
Sure.
I looked at the Renaissance 13F, and these aren't all their top positions. But I think one of them is actually. They have holdings as of the end of March, which is going to be dated, by the way. So, so I'm just trying to like warning, caveat, all that stuff. But they own Reddit, they own Robinhood, they own Palantir, they own some other social media stocks. They already are on Twitter. That's already happening. Ravenpack is out there. I'm a customer of Ravenpack. My friend Akarsh is the CSO there. They have an API out there that does news sentiment. There's a lot of APIs that scrape Twitter, and
that's called Rainbow Pack.
Ravenpack. I mean, Twitter itself has their own API, $60,000 per year. This is what the future investing looks like, right? Is all these legacy investors are going to get destroyed because alpha in part comes from speed, information processing, variant perception, right? So it's ideal for AI. We're not there yet, though. It takes time. Like the context windows are too narrow. I can't load up every single security in the S&P 500 into a context window with all the relevant information. We've tried. It breaks these systems. You have to do one industry group at a time.
No, you are correct. Have you enjoyed working at all with Bloomberg or Koyfin?
I use Koyfin regularly. Yes. Bloomberg, not so much. I think it's fantastic. It's one of the best businesses in the world, Bloomberg. I'm very friendly with Bloomberg, actually, in many, many different ways. But Arthur Levitt is on the board of Bloomberg, is on the board of my company as well, former SEC chairman.
Of course.
My wife works at Bloomberg, been on Odd Lots. I love what Joe and Tracy do with Odd Lots. It's a great organization, the best fintech ever created. But the terminal at 25,000, it's you can get a lot of value through other tools and building, if you have developers, your own kind of homegrown systems. We need a few more months, but I think that concept of like an automated AI investing, like Bridgewater is building that now, by the way. They were seed investors in OpenAI. But the barrier to entry to doing that is much lower than people think.
I agree.
Right? Now, the hard part to that, it's not the access to technology. It's actually having a clear vision of what you want to build and having discernment on the workflows to run an investing process. You can't be a technologist first. You have to have both sides of it. I ran into an entrepreneur. They raised a boatload of money from top tier VCs. I won't name the startup. I don't know if he wants me to or not, but no issue with it. The primary strategy that has the most attraction and interest is one that's doing the best in the last 12 months. We got together for lunch. I said, let me see the holdings. I said, this is just long momentum. It was all things that just gone up the most in the last year. I said, we got together like in February too. I was like, that's not going to like end well. It's not going to end well. It's like all late momentum. So that's the thing with, if you give someone that doesn't know what they're doing AI, they're going to hang themselves. A lot of people play this game, by the way. It's called curve fitting, right? Put in a lot of data. If you torture the data, they will confess to everything, to anything. That's the problem. You have to be highly prescriptive in how you use AI. You cannot say, AI, what do you think I should buy? That's a wrong question to ask. You have to have one AI that has a view on factors like value versus growth, momentum. You have to have another AI that is focused on security selection. I have another AI think about macro and intro. This is all agentic AI. Then you need an orchestration AI to bring these together.
Yes.
You need another AI to do portfolio construction, another AI to do risk management, another AI to be your trader that identifies entries and appropriate exits, another AI to think about tax sensitivity, another AI to create the trade file. This is all the stuff we're building.
Are you, because I have some level of fluidity, of course, to what you're saying, are you doing this all internally with your quote unquote 4 people? Would you be willing, what's the word I'm looking for, to almost outsource them to develop something custom that you charge, maybe license to a family office that's more specific to them?
I think we'll we haven't sorted out the commercial angle. I know that if we build something that we enjoy and we value and we use every day, then it has value and other people will see value, right? Now, the end market, we have to think through that. There's an institutional angle, there's a consumer angle. I'll show you real quick, actually. Give me a ticker, a stock you want to have a view on. I can.
How about EAT?
Ooh, EAT, Chili's.
Yes, exactly.
It's a quality compounder.
I know.
This is a good business. They have strong. I'll show you how I approached EAT, actually. So it gives me a bull case, bear case, prioritized by information. So 31% year-over-year sales growth as a restaurant. They've adjusted their menu, which has improved margins. And the bear case is the valuation's 30. It's a little bit more. By the way, this is as of April 29th. So this is, a month has gone by since then. So it's costly to re-update these every day. But the thesis is here, though. So, this is the same store sales growth story. And they did a turnaround. The turnaround was working. It shows me all of the competitors. DRI, our friend Texas Roadhouse, we talked about that before.
All right. Yes, we have.
QSR gives me a chart. And then I can ask it. I can say, hey, show me. I can show all of the comps in here too. And it'll pull up the bull bears on all of these. Or I already have predefined themes like restaurants here. I can just load up the restaurant theme here, right? And then I can just say, hey, here are the factors. And this is not meant to be externally kind of consumed. These are just different factors. And we've trained the model to understand what are good factors. And I can say, well, what do you want to buy? What do you want to sell? So it's stitching together these workflows that will unlock productivity growth. And it'll just transform investing because the AI can chunk more information. A human can hold 8 to 11 ideas in short-term memory, right? We have cognitive biases. We have all these biases to decision-making. AIs don't have that. So, I think that's going to transform investing. I'm super stoked about it. I'm excited. That's my night job and my pre-8 a.m. job is that. And
Very fascinating, Ram. This is like it flew by our 2+ hours. For those that would like to follow you on X to learn more about what you're doing, how could they learn more about you, follow you in the firm?
You can follow on Twitter at Ram Ahluwalia. I just typed in my handle there. We also have a newsletter called the Lumida Ledger newsletter. You can follow us there as well. We publish that weekly. I'll drop that in that link here also. We're also on TikTok and Threads. Look up Lumida Wealth. We're creating good aging and longevity content. That's a passion of ours. Good AI content. Doing more curations. No one has time, right? Like, how do you focus attention? It's curate information. So that's another handle we have that their sole job is curation of content. Go through the 3-hour Joe Rogan podcast or the 2-hour BG2 podcast and find the 12 minutes of insight. That's the objective of that handle. So thank you for the question. I appreciate it.
Of course. And that's Lumida Wealth, everyone. And Ram's last name is Ahluwalia. He's incredible. I saw Ram in person for the first time in a couple of years. I invited him to a member breakfast I hosted a couple of months ago. It was great to see him. Look forward to hopefully collaborating and doing some in-person gatherings in greater New York here this later spring into summer. And a little bit of context for the audience that may not be as familiar with me. I'm Angelo Robles. Originally, many of you may know me as the founder of Family Office Association, a consortium of single-family offices. Grew to be one of the largest. I sold it. Took a little time off, became more of an active allocator investor, created certain structures so I could live through what I talk about in terms of family offices, holdco, private trust companies, and hopefully soon, private family foundations. And I've been incredibly active in terms of as an advisor and consultant to family offices around the world. I do have a new membership platform limited to only 100, effectively really kind of founding families and single family offices. Go to my website, angelorobles.com. That's angelorobles.com to learn more, including what I'm doing with my AI Family Office Masterclass in New York, which I am 24/7 obsessed about and just find it so invigorating and exciting, and just shocked how many incredible successful families, investors, allocators, family offices kind of know that I'm right in some of the things that Ram spoke about as well. You're just playing it very carefully and very slow. And I think that's going to be the wrong move. We could go into history, political issues, from Rome to the French Revolution, definitely the Russian Revolution. Things don't last forever. Dynamics are changing. Things are going to move quicker than ever before. Yes, this could be a little bit of a quote unquote a scary world. And I think as a family, you have a chance to make an impact, to be of value, and why I call my private membership community SFO, which is the acronym for a single family office, continuity. It's the continuity part within your family that is going to be incredibly important and is as far away from assured, I don't care how much money you have, as you could possibly get. So go to angelorobles.com and learn more. Please, all of you, follow Ram. He's incredible on X. Reach out to him. What a great thinker and thought leader. What an honor to have you on, Ram, and I look forward to seeing you this summer. Thank you so much.
Really kind of you. Until next time, Angelo, always a pleasure. Looking forward to seeing you in New York soon. Cheers.
Thank you, my friend.
Take care.